Meanwhile, traders at Axis Bank say the T-bills market remains awash with offers and long-dated papers with few bids to match. For the bond market, some interest is seen on the long end of the curve as local players seek to buy the 2049 and 2050 maturities at 14.25 levels. Kolawole Komolafe, Treasury Team Member at Axis Bank, joins me now for more market updates. Kolawole, thank you for taking the time out to join us today.
Yeah, hi Esther. It's a pleasure being here.
Thank you. Let's bring us up to speed on market trading so far across the different segments.
All right, so I'll start with the money market. So system is still awash with liquidity. We saw it open the week with a credit of 823 billion naira, while for the open repo and overnight rates, we saw that open at 0.93 and 1.33% respectively. However, during the week, we saw banks debited for the AMCON charges, which depressed system liquidity slightly to 724 billion naira, and consequently, we saw the OPR and overnight rates increase by 7 basis points and 9 basis points respectively to close at 1% and 1.42%. In the fixed income space for the Treasury bills, we saw it open the week on a bearish note. There was an NTB auction conducted by the DMO on Wednesday, where 141.77 billion was on offer across the standard tenors. We saw subscription at about 692 billion naira, and we saw stop rates decline across the standard maturities. For the 91-day paper, it closed at 2.86%, while for the 182-day paper, it closed at 3.5%, and for the 364-day maturity, it closed at 5.94%. Post the auction, we've seen the bearish undertone continue in the secondary market space, while for the bond auction, for the bond market, it opened with mixed sentiments. We saw offers on the long end of the curve, particularly the 2049s and the 2053s. Also, that sentiment continued through the week, and overall, we saw rates decline by an average of 3 basis points. The DMO plans to conduct an auction on Monday, where 360 billion naira will be on offer across the standard, across the 2029s, 2033s, 2038, and then the 2053 papers. On
right.
The all right, go on.
If I could just come in here, I'm just looking at how the elevated liquidity levels at the market continues to drive yields lower. Just looking at the one-year paper, around 3%, if I heard you correctly. I'm just wondering, at what point? I mean, how much lower can these rates go? Is there going to be some resistance point at some point? I know that liquidity levels could potentially remain elevated for longer, levels, yeah. But at the end of the day, will there be a resistance point?
Okay, yeah, well, the one-year T-bills closed at 5.94%. If you're looking at a resistance level, it's, like you said, largely dependent on liquidity, which we expect to still remain at elevated levels. We expect the NBS to release inflation figures by next week, so we would watch that space and see how that would affect the NT bills market. But for now, in the secondary market, we're seeing it trade as seeing it trade at bids of 5.8%. So that's what we expect to happen by next week.
All right. Talk to us about the FX market, Naira trading today also. Excuse me, what we can expect and liquidity levels.
Yes, so for the for the FX space, we saw the CBN intervene this week, where they sold to deposit money banks, right, which saw the INE rate close at 744 naira for the kobo, but that was on Monday. Although by yesterday it had already gone, it closed at 746 naira to the dollar. They also intervened in the wholesale market of the wholesale market, where they sold yuan for eligible transactions. So would see those are the levels we saw it close, and then we'll just also watch to see what happens in that space.
But you get a sense that this may become a regular thing, because we know that demand still outstrips supply. I mean, give or take on any given day. So is this something that could become regular?
Oh yeah, yes. For the Short term, yes, we still expect that demand would outweigh supply, but yes, the CBN would expect that they would continue to intervene, and then we just hope that we'll get to see more liquidity come into the system to depress rates.
Okay, we have just a minute left. Just curious about activities at the corporate bond markets for corporates who are looking to maybe raise commercial papers, to fund operations. Just looking at the current benchmarks and how attractive it is for them.
Okay, yes. So they would also try to benchmark it to the benchmark bonds, but of course there will be premium for whatever papers that they're issuing. We're currently seeing it at, say, 16.28% yield. So we expect that it to be at those levels for corporates looking to raise CPs.